Good morning, traders. Today is Wednesday, August 25th. My name is Charles, and this is the Pirate Traders live stream. The Pirate Traders live stream. Okay, so what are we looking at here in the market? Well, we have further rotation, right? We talked about this yesterday, that there are two ways for the market to balance off the excess created here in this move higher. Okay, one way would be that the market pushes higher, creates the excess, and then it balances off at higher prices using time. Okay, so this is one idea of how you could do it. You can just use time by bouncing around at higher prices, and then the market has potential to break out to the upside, right? Another way you could do it is with price, which is where you create the excess to the upside. The market trades around for a bit, and then it pulls back down, okay? And then it can work its way back higher again. So you can repair it using price by coming back down to where the excess is, or you can repair it with time by just spending enough time up here at these higher levels that the traders just accept that this is a fair price to do business and that the market is ready to continue higher. Okay, in this case, I think it is the latter. I think that what we are getting here is the market balancing off this excess using time. Okay, if we zoom right in here and we get into looking at essentially since we got up to this level and started balancing off, we can see that we're creating more weakness above us than below us. Okay, so the people that are trying to stop the market from moving higher are weaker hands than the people that are creating the support beneath us to continue moving higher. It is worth noting that yesterday's value area was just slightly overlapping to higher than the previous days, which is bullish. Okay. So what do I expect to happen today? Well, first off, we're opening inside the previous day's range, inside the previous day's value area. So I expect chop. And because we've had so much chop in this area over the last few days, I wouldn't want to take any trades in here until I had a better idea of what the market is doing. Okay. As far as potential breakout to the downside, if the market gets below yesterday's low, you could use yesterday's low, or if you want to be a little more cautious, you could use the overnight low. So if the market opens and it trades down to here, okay, pushes below, comes back up and it's finding resistance, that is a short, okay, for further downside continuation. And same thing at the high. If the market opens, it pushes above yesterday's poor high, repairing it, and then comes back down and finds support, that is bullish for continuation higher. So that's the first potential thing to look for. And then of course the opposite, right? If it pushes its way up above yesterday's high, comes back in and does not find support, you can go short for a trade to the opposite end of yesterday's range, and vice versa. If it pushes lower, gets below yesterday's low, but then it comes back up and it doesn't find resistance, then you can go long for a trade to the opposite end of yesterday's range. Okay, so the assumption basically is that it's going to trade around in here until it's ready to break. So if that break happens, you want to go with it. But if it fails, you want to assume it's going to rotate to the opposite end. Another thing that's worth noting here is, even though I do believe the market is balancing off this excess with time, one thing that's very important to remember is the market often needs to break before it can rally. So same as yesterday, I am very cautiously watching for a liquidation break in the market. A liquidation break is separate than a regular sell-off. A regular sell-off, the market will start pushing lower, and it'll come up and find resistance and push lower like this, right? That's how a market sells off. A liquidation break, the market would literally just fall like a brick, and it would be very quick. It'll be very fast tempo that it'll be falling, and it'll have very thin volume. Okay, white candles over here on the left. If I start to see that happen today, I will not try to short it, even if it's like breaking this low or breaking this potential support here. Okay, if it feels like it's a liquidation break, which again will be fast tempo and low volume, I'm going to just sit by and wait and see how far down does it liquidate, right? Potential supports there in a liquidation break could be 44.70, which is where the halfback from a couple of days ago is sitting right there. Just below that is the base of those B period single prints. The base of single prints is very commonly a support on a liquidation break. So there's that one. If not the low of the 23rd, okay? And then if it gets down into the gap, okay, this is where things get a little tricky. If the market trades and it gets down into the gap, that is almost always a very high probability that the market will fill the gap, right? So you would want to go short here on that probability. But again, being cautious, okay, if it is a liquidation break, if it is falling very, very rapidly, then I wouldn't go short. I would wait. And it's worth mentioning, okay, the market is open. It's worth mentioning that the last time we had a big gap like this, the market had a massive sell-off. The gap was like, this big right here. The market had a massive sell-off and then didn't quite fill the gap. It left just a little tiny bit there and created a poor low, and then V-shape recovered right out of it. So if you're going to go short at the top of the gap, which is a good high probability trade for the gap to fill, just keep in mind that these buyers are very, very willing to step in early and step in at weak references and turn around and just V-shape out of there. So once again, if it pulls down into the gap in a liquidation break style, I wouldn't touch it no matter what. But if there's a sell-off that gets us down in there, I would go short, but very cautious, very ready to take profits right away because it could turn around before it fills the gap. Okay? I know that's not very helpful, but it's just you want to be cautious. All right, so let's get some chop going here early in the market. Okay, so now those advancers versus decliners no longer pegged at higher prices. Pulling below the zero line is a little bit bearish here early in the morning. Same thing with the breadth. A little bit bearish, but it's first thing in the morning, so we'll give it a minute. Good morning, Arcaleon. Good to see you. Rad is back with us. Good morning. JL99, good to see you. Tom back with us. Good morning. Zeb is here. Good morning to you. Jose, welcome back. Good to see you. MK, bonjour. Marco is here. Good morning to you. Shibaho Deep, good to see you. Good morning. And Ronald is back with us. Welcome, everyone. Please smash that like button. 65 people watching, 13 likes. Smashing that like costs you nothing, but it helps the stream. So I'd really appreciate it if you wouldn't mind hitting that thumbs up. Good morning, Pavel. Good to see you. And Marco, yes, we got some nice, beautiful taper there on the low, but I don't love the 18 contracts. And it is a poor low, as it is one tick from that weak low left behind yesterday. So that increases the odds that the market needs to trade back down there and repair it. Let's jump over and take a quick look at the NQ over here. See what the Q be do. Okay, so the Q is a little more bullish than the ES. And this is actually a great learning thing. So what I talked about earlier is there's two ways for the market to balance off excess. One way is to go sideways like this at higher prices. This is another form of that, which is like channeling, where it pushes higher and then it's still just rotating at higher prices, but it's rotating up, which is just a little bit more bullish. Okay. Gives you a lot more support if the market needs to break very quickly before it can rally up higher. You got a lot stronger support in that sort of channel. But otherwise moving very similar to the ES. Good morning, John. Good to see you. Yes, sir. Good to see you. Welcome. Harry, any NQ support? Ooh, yeah, there's support in the NQ. No doubt about. Not going to be able to give you super specific levels, but certainly, yeah, see, it's hard to give a specific, but like anywhere in this range, it's got lots of support. Overnight low definitely could act as support on a pullback. Yeah, it's tough to pick an exact level because there's been so much overlap, so much rotation in here. They could find support anywhere. I would say the lookout below, if it breaks, would be essentially the closing price from the 23rd. So you're looking at like 1503, 04-ish, somewhere in here. If that breaks, then you're looking at further downside continuation. because then they're getting into repairing that excess. And there was a lot more of it on the NQ than the ES. Look, 1, 2, 3 sets of single prints and a gap. Okay, so 3 sets of single prints, a giant buying tail, and gap. All of that is a lot of excess. So the same as the ES. If the market were to get below this level, you know, it pushes down and gets below there, finds resistance. That is a very good high probability short. The only reason I wouldn't take it was if the fall was a liquidation break. So that very fast-paced, low volume kind of fall, that I would not short. But any trade below there is definitely shortable to go repair that excess. But so far, it doesn't look like that's what they want. They want to repair with time. What is the resistance we're hoping to break through? That would be the repair of the poor high from yesterday. So that's 4488.50. Okay, right there. And the idea is we want to see them poke back through it, get at least a few ticks above, and then come down and start finding some support in here for continuation higher. First target is the week all-time high, and then monitor for continuation higher from there. And then, of course, the same thing with yesterday's low. If they get below it, come back up and find resistance. That is a good short, unless it's a liquidation break. Okay. As far as the conceptual idea of the market waiting for more information, which is commonly another thing that leads to rotation like this, the last days, is like the market's just waiting for a new signal, a new piece of information. We got one person from the Fed talking today at 1 p.m. Eastern, but I think the larger players are probably stepping aside and waiting to hear what Jerome Powell says on Friday. So it wouldn't be as crazy as you might think for us to rotate like this for a couple more days. Not that I think that's what's going to happen, but there just is a chance. "82 people watching, 29 likes. Please smash that thumbs up. I would truly and sincerely appreciate it. It's a great way to support the channel. And all it costs you is a single click of your finger. Boop. Just a little click, click. Thank you, guys. And that's why I love you, Sanju. Cyworker, good to see you. So Charles, why do we get this chop like this when we open inside the previous day's range and inside the previous day's value area? Why does this always happen like this? Well, the reason is because of human emotions, right? A lot of traders, particularly unexperienced traders who are newer to the business, they have this weird need to participate first thing in the morning, right? We get a day like Monday where the market opens. It only goes like a couple of ticks. If you were watching when this happened on Monday, it happened like instantly. The market went a couple of ticks lower, turned around, and then it just like a rocket ship trended higher for hours, and it just kept pushing and pushing, right? When that happens, that causes traders, and I don't understand why, but it's a very clear psychological thing. It causes traders to make the assumption that that's what's going to always happen. And so every day they wake up, they feel like they have to get into a position right away, first thing in the morning, because the market's going to take off and they're going to miss it if they don't get into it right away. And so what happens is you open inside the previous day's range, and then half the traders think it's going to go up, half the traders think it's going to go down, and they're both desperate to get into those trades first thing in the morning. And because they're weak hands traders, right, a lot of times they don't put their stops in a location that is based on where the trade goes wrong, but instead based on like they're only willing to risk a certain number of ticks or whatever like that. So what happens to them, and this happened to me for years as well, is like they'll go long here, market will push higher, and then it'll pull back down, and then their stop will be like right there. Boom, their stop fills, market pushes higher. Oh, they enter again. They don't want to miss it. They put their stop here. Market pulls up, pulls back down, fills their stop, starts pushing higher again. Oh, God, I'm going to miss it. They get in, and they just keep kind of getting in and getting stopped and getting in and getting stopped. And the market just kind of grinds up and down, eating up their stops both directions. Whilst the longer term, smarter traders, I don't want to say smarter, more experienced traders, they know to just step aside and let the market do this, and that it will give you a better signal of which way it's going to go once all those traders have exhausted themselves. Okay? Because these people will eventually give up on this entering a trade, getting stopped out, entering a trade, getting stopped out. They'll stop eventually, and then the market can move one way or the other. Yeah, Marco, nothing to be ashamed of. I'm telling you, it happens to everyone. Arthur, good morning to you. Yeah, see, that's the killer, Marco. This is something that James Dalton talks about all the time, which is that there are two types of capital that you need to be a successful trader. One is your trading capital, the actual risk money that you have for taking trades, and then mental capital. If first thing in the morning you exhaust yourself trying to get into a trade first thing in the morning while the market's just chopping up and down, you end up wearing yourself out so that later in the day when the market does something like push below a low and then find resistance, you don't see the trade and you miss the bigger, more profitable trade, right? Because you were exhausted from going long and short and long and short and long and short all morning trying to catch the move early. So everyone's different. There are scalpers that can make a lot of money in this area. But for me, the way I trade, step aside and let them do battle, and I'll wait for the better signal. Well, Donkey, the good news is you didn't miss anything. The market was just grinding. But good to see you. Yeah, I would say of all the things that Jim Dalton taught me that probably were the most likely to get me towards profitability, the first was understanding that when you open inside the previous day's range, you get chop. So I stopped losing money first thing in the morning, which kept me mentally acute for the rest of the day. That was the first one. And the second one was what I've been talking about this morning, the liquidation breaks. That when a market starts to sell off very, very rapidly with thin volume, the idea that you don't short it, that you wait for it to find support, and then as it's coming back up, that's when you go long. You enter there, and then you monitor for continuation to see, can it get back to the point where it broke? Which, if it is a liquidation break, if it is a true liquidation break, it will always get back to that level where it broke. So those two things have saved me so much money in losses. All right, ticks are very subtly starting to trend higher, and they are above the zero line. That is bullish. Advancers versus decliners now trending higher and above the zero line, which is bullish. And the breadth is still just a hair below the zero line, but that's the last internal to catch up to the rest. Oh, there you go, RK. It's going to be another Dalton webinar at noon if anybody wants to go sign up for that. They're free. Why not? Damien, welcome. Great question. Yeah, so the volume that you see over here on the left side, that is all the trades that take place, both the long and the short contracts. That's just the total number of contracts that traded. We can get an idea. This is going to sound overly simplistic, but it is quite true. If there are more buyers than sellers, the market goes higher. If there are more sellers than buyers, the market goes lower. So when you get into volume nodes like this, you can just kind of watch what happens. When it pulls in there, does it pull down and then push up? Pull down and then push up? It means there's more buyers stepping in there, right? Because they keep pushing the price up. Another thing to look at is the ticks, right? That's what all the internals are basically measuring, buyers versus sellers. So if those ticks are above the zero line, there are more buyers than sellers. For anyone else who might be new to the profile and wondering what the heck am I even looking at? Is this the Matrix? What is happening here? So the purplish looking profile, these are the regular trading hours. So this one is yesterday's regular trading hours. Okay. And then the bluish one, that's the overnight. So that's all the hours before and after the market closes. Okay. The letters, each letter that you see is called a TPO. And each letter represents 30 minutes of time. The reason I have two of them next to each other here is because I like to have one profile that looks like this, where it's collapsed together, And then the second one is expanded out so I can see each 30-minute period. So I can show you that once the B period starts to print here. Or actually, really, it would take till the C for you to clearly be able to see it. And then the section over here on the left, that is the volume profile. So it's just showing us how many contracts are traded at each level. You got the actual number there, and then the candlesticks show you the overall volume compared to the rest of the day, right, within this profile. The larger, obviously, the more volume. And the red color is the top 30% of volume. The pink is the middle 40, and the white is the lowest 30. Can I define a poor low? Absolutely. So, okay, so what a poor low is if the market comes down and it doesn't, we always want the market to stay at least 2 ticks away from a previous important like technical reference in the market. And the reason is because large traders, who are the traders who generally move the market in a more reliable way, they can't buy in all at one level. So these 18 contracts that traded right here, those 18 contracts were bought because somebody was looking at this week reference from yesterday. Okay, they were looking at how the day traded. They saw that that was where the M period stopped pulling down at the very end of the day. And so they said to themselves, that's a good level. I'm going to jump in right there. But bigger players, obviously we know it's not bigger players because it's only 18 contracts, but also bigger players can't step in all at one level. They have to kind of ladder their way in and kind of get bought in at various different levels. So anytime you have a reference that's only 1 tick away from another reference, you assume that that's short-term traders who bought there. Traders like you and me, just regular retail traders that don't have very big accounts. And so we can put all our orders right in there. And so we just consider those to be weak references that at some point the market will need to repair. Well, why, Charles? Why, if it's short-term traders that bought this, does it need to be repaired? Well, because short-term traders have to take profits in the short term as well, right? So if they bought down here and they take their profits up here, at some point the price pulls back down. So that makes it a weak reference, okay? The fact that it's 1 tick away from a previous weak reference. Now, what makes it poor is because it is the low of the day. Poor references have a very specific way that they function. Often, once you create it, the market pushes away from the poor low. So it comes down here. It stops 1 tick from the previous reference. Then it pushes away the opposite direction. And then another thing that is very common about poor lows is they almost always get repaired with very high probability. So the market will go the other way, but then at some point in the day, it comes back down, or it might be 2 days later, 3 days later. At some point, it comes back down and gets 2 ticks below it. Okay. Okay, so we got another bullish signal here in the 1 time framing higher in the B period. Ticks are trending higher. That is bullish. Advancers versus decliners trending higher. Bullish. Breath now trending higher. Bullish. So it looks like they're going to attempt the breakout to the upside, but they do not have spectacular volume. So let's see what happens when they get 2 ticks above the poor high here. Is that enough excess that they pull right back down? Or do they get above and come back in here and then find support? If they find support, I would go long for continuation higher. The first target being this overnight high. The overnight high was made, the all-time high, which was made in the overnight at 44.92. The reason that would be a target is because every poor high ever every week all-time high created in the overnight is repaired by the regular trading hours. Okay. Shubaho Deep, yes, we are one-time framing higher. Although, as we've talked about many times, whilst I recognize the one-time framing and I do see it as bullish in the B period, I often want to see the C period continue it before I really have confidence that we have a trend day. Certainly, this does not feel like a trend day. Yeah, I mean, if there's going to be a new balancing area, probably yesterday's high is going to be the balancing area high. So it's probably going to be, if I had to guess, it's either going to be like this is the balancing area, or the bottom of it might end up being the base of these single prints down here. So it might be that this ends up being the balancing area. And then, of course, on the NQ, it'll be a channel. Right? It won't be a flat top balance. It'll be a channel. Whoops. So on the NQ, it'll look more like... Oops, that was terrible. It'll look more like that. Okay, back to the ES. Uh, 88 on the upside, for sure. I don't know about 78 or 76. Oh, you mean those as the bottom end? Yeah, for sure. I just honestly don't like how tight this range is, this balancing area. I feel like it needs kind of a pullback. And I'm really liking the halfback and the base of the single prints from Monday as potential support. Okay, so for those of you that are newer now, it's a little bit easier to see. So I have two profiles for just for the regular trading hours today. I have two profiles. One is the collapsed, which looks like this one over here, where all the letters overlap each other. And the other one is expanded out for each 30-minute period, which kind of looks like that right there. So you can kind of see how it moves. So if you're curious why there's double letters, that's what's going on. I mean, for what it's worth, Donkey, the people at AMP are great for customer service. So if you just give them a call, I'm sure they'll let you swap it. They'll send you like a a form you just like submit, and then you can swap it from Rhythmic to CQG or CQG. Oh, bummer. Oh, because you like already paid for the fees for this month or whatever. That makes sense. You're stuck. You're stuck for 5 days with R Trader Pro, which I'm sure is garbage. What broker were you using before? Ah, Ninja. A lot of people love Ninja. Dope. Trading with an Xbox controller. That's great. Yeah, I love TradingView, man. I'm just waiting for them. You know, eventually they're going to come out with their own market profile, and then they will be the big winner in my mind. Diane, you can just reach out to their like customer support email or phone. As a matter of fact, now that I think about it, I think when I first signed up, they sent me a text message with like their contact so that it automatically populated my phone. Let me look and see. I might even have it right in front of me. Yep. AMP Global USA. So the phone number, I'll just type it into the chat. No, Marco, I disagree with that. TradingView has just been building their profile, I mean, building their software out little bit by little bit over the years. So they're constantly adding new features. The day will come where they'll add market profile. They've already got volume profile. They've got like 4 different options for volume profile. I mean, it's actually pretty awesome. So yeah, they'll get market profile soon enough, I'm sure. And for those of you that don't understand what the difference is between TradingView and other companies, is that this doesn't run on your desktop. So it's their servers that are doing all the calculating instead of your computer doing all the calculating. So it's just a little bit better in that regard, at least in my opinion. A Nav Trader asks, hey Charles, is market internals a Jim Dalton concept? It is not. It is a Peter Resnicek concept. As a matter of fact, I've heard Jim Dalton talk about how he thinks they are a waste of time. So Jim Dalton developed his system and he sticks to it, and he just watches the profile and the options chain in Thinkorswim. That's all he watches. But I followed Peter Resnicek for years before I started learning from Jim Dalton, so I decided to give the internals a try, and I find them to be an enormous help. It's like getting a second opinion on a trade. Speaking of which, we're pushing our way back up towards that high. Do we have the potential to break out? Not at the moment. Okay, we lost our trend up in the ticks, and we're right at that zero line. So odds favor more rotation. Inyat asks, what would you suggest for new traders in this scenario? Do we wait and see if the market has a particular direction? Absolutely yes. Unless you're a scalper, unless you're literally only trying to make a few ticks at a time, do not try to trade the opening chop. Because even if you end up getting into a profitable trade today and it works out for you, if you get into the habit of trading when the market is doing this in the morning, over time it will not work for you, and it'll cause you mental exhaustion. So you want to keep your mind fresh and relaxed and just waiting. You know what you're looking for, right? You're looking for the market to get above yesterday's high and then find out, does it go above and pull back in, or does it go above and then find support? Until then, you can just sit back, relax, make a cup of coffee, and enjoy the morning light. The ad is basically measuring the amount of volume that's going into stocks that are going up as opposed to the amount of volume going into stocks that are going down. So the advancers versus the decliners. Okay, so that first week reference is repaired, but we've now got a poor high today, right at the poor high from yesterday. So remember, we often get a push away from the poor high. If it immediately pokes back up through, that is slightly more bullish. Yeah, Donkey, I can see that trade, but again, I would just caution that this might be the push away from the poor high. They might just be building up steam to poke through. Let's see what the internals are doing. Oh no, they're trending down. They're below the zero line, so instead it's probably buyers running out here. Yeah, 100%. If they repair the poor high, if they get 2 ticks above and then pull back down, don't find support, get below that 86, that is definitely a short to repair the poor low. No doubt about. Correct, yeah. So yesterday's high was poor because the L period stopped at exactly the same level as the K period. Looks like back to back. Okay, so that made that a poor high. And then today's high is poor because we stopped at that exact same level again. Right? So who's doing that? Who can stop the market at an exact specific price level? Short-term traders. And it's poor. The reason it's poor and not weak is because it's the high of the day. So any reference inside the day's range is considered weak, but if it is the high or the low of the day, it is poor. So we can see that the volume has been slowly fading over the last few days. It's a sign that bigger players are stepping aside and waiting for new information. Tommy said he uses Tasty Trade for his options. Philip, it's good. I got a bunch of applications out now, and I'm just waiting to hear back. But they are all dragging their feet. It drives me crazy. These real estate people in New York are the most unprofessional I've ever come in contact with in my life. They don't respond to emails and phone calls. And they don't seem to be in a rush to get anybody into a place. So I'm just waiting. Yeah, NQ still just choppy. It is one time framing down at the moment. Okay, buyers are struggling here. They're running out of steam. At this point on the low, so the same way earlier this morning I said if the market got below yesterday's low, if it pushed down, got below there, came back up, found resistance, I would go short. I will now consider today's poor low. Since we got a poor high and a poor low and we're still just grinding, I'll just move that up to there. So now if the market gets below today's poor low, comes back up and finds resistance, I would also short that for further downside continuation. Yeah, the way that Jim uses the options, he straight up just buys calls or puts or spreads, calls and put spreads. Yeah, bro, it's the Greeks that get you. Marco. Bro, there's nothing wrong if you're feeling like annoyed that the market's going nowhere. Take a break, man. Get up, stretch, walk around, get yourself a cup of coffee. Just relax for a bit. Come back, look at the market, see what it's doing. Is it still just chopping? Okay, I got to wait. River Rock, good to see you. Welcome. I am right now. I'm staying at an Airbnb in Brooklyn, but I'm looking to move to Astoria, which is like just above Brooklyn. It's a little bit quieter of a neighborhood, a little more family-esque. I'm an old man. I don't really need the hip bars all around me. Philip. I actually like that. That's good. Exactly, Nick. It's like a quick jump into Midtown. All right. Well, with the printing of the C period, we are still maintaining the one-time framing higher at the moment. Ticks are back above the zero line. So if they can stay above there, we could potentially break out to the upside. Ronald, yeah, it's very possible. Another range day. Like I said, it might be that a lot of people are waiting to hear what Jerome Powell has to say on Friday before they take any big bets. But you never know. Markets are random. It could just come to life right now, out of nowhere. Anything can happen. All right, guys. Well, with that, I'm going to bid everyone farewell. I wish you all the best for the rest of the day. I hope you make lots of money, and I hope things get a little more interesting here. Once again, as I've been saying all day, keep yourself aware of the potential for a liquidation break, and that would be buyable, not shortable. Because even though the market is balancing using time, so it's staying at higher prices, a market often has to break before it can rally. These buyers love a V-shape. They love a liquidation break. So if we get a liquidation break down here towards, 44.70, 44.67-ish, this area down here, and it finds support, that is buyable, not shortable. Okay? They love to freak you out with a gap. Everyone in the world sees this gap. They all know it needs to be filled. And so they'll have a liquidation break to make you think you're going down there to fill that gap, and then out of nowhere, it just pushes right back up. So that would be one thing I'd want everyone to be cautious for today. If you are a member of the Brigade, give me about 5 minutes, and I shall be live in the private stream. For the rest of you, you can join the Brigade in the link below. Just costs $10 a month, and it's a party. It's fun. All right, guys. Have a great rest of your day. Goodbye.